Hi guys, thanks for tuning into another episode of Nuggets News, or our monthly housing and economy update with our friend Martin North coming to us from over in the UK. How are you, Martin?
Yeah, pretty good. We live in crazy times, don't we?
We do. We've got that election, which is the most divisive and I think important election in US history. What are your quick thoughts on that?
Yeah, well, it's hard to read precisely what's going on because, of course, a lot of the polls are partisan. There's a lot of abuse being thrown back, fascism on both sides of the fence. I think for me, the takeout is this: almost irrespective of who gets in, we're going to see the US deficit rising. We're going to see more pressure on the federal budget in the US. And that's going to have a very significant impact on bond prices. And we'll touch on that in a second.
Yeah.
So, beyond all the noise, and who knows where it's going to turn out, it really just shows you how sick the political system is in the US.
Yeah, I feel like I'm watching a movie when I watch a lot of these highlights and clips that are coming out from both sides. The other thing I want to touch on quickly was censorship. So we've seen, obviously, for everyone at home, we're just coming back from our second strike recently. All our content will now be on Rumble as well. We've just got to be really careful with certain things that we say and not say now. Candace Owens hasn't been allowed into Australia. We saw Novak wasn't allowed in. So it's almost like, we've been talking about this misinformation bill and free speech, but in a lot of ways, it's already here in Australia. They're sort of saying if you're going to start discussions and discord around certain topics the government don't agree with, you're not allowed to have a voice, which is just crazy.
Oh, it is absolutely. And if you look at the recent COVID report, you can see that a lot of the things that people were raising through the COVID period have now proved to be absolutely right. And yet we weren't allowed to talk about them at the time. And, the point is this, and the misinformation, disinformation bill continues to rumble on. The point is that if government decides to try and control and imposes restrictions on particularly social media companies, well, they're going to actually be preemptive. So they're going to basically say, you can't talk about this, you can't talk about that, because they're commercial businesses. They're not interested in free speech, whatever they might position themselves to be. And so effectively, the battle for free speech is almost all but lost. So that's the real issue that we have at the moment. Even now, it's hard to say and talk about certain issues, and it's going to get worse rather than better, I think. So you need plan B and plan C as well.
Are you on Rumble or BitChute or any of the alternatives yet, Martin?
Well, I have my own website, and from there I can basically put my content up through various means that actually are beyond the reach.
Perfect. All right, let's dive into all your great slides. So first up, we've seen the interest rate on bonds starting to creep up, which for people at home means that investors are selling bonds in the US.
Well, it essentially is weird because you'd expect the bond rates to ease down, the Fed cut rates. Markets are scratching their heads. I think that there's a bunch of reasons. There's a huge amount of uncertainty. The US Fed election is going to require, as I said, more borrowing later. That's going to put more pressure on bonds. So, bond investors are saying, well, we need to be rewarded for that. So around the world, we are seeing those bond rates rising. But at the same time, if you go into the next slide, you can see there that the market's also charging higher too. And in the US, that's predominantly because big tech's back in vogue. Some of the recent reporting around, or particularly on banks, were actually pretty strong. So the US economy looks pretty okay, but it is a bit of a conflicting signal that we're seeing bond rates rising and equity markets rising. Something's going to break at some point. The question is which. To my mind, the problem with equities is they're way overvalued relative to long-term price-earnings ratios. They're priced for perfection. I don't think we're in perfection now, so I think the markets probably will take a bit of a hiccup, but probably not until after the election results in the US are known, which may be in a week or two, or it might be a lot longer.
Yeah, and I might share some more thoughts on this when we get to the BRICS slides that you've got for us. But similar situation in the UK with bonds and them.
Yeah, so the bonds has gone up in the UK. Now, it's interesting, in the UK, there's a budget coming out today. They've invented the rules for how much they can borrow. So they're going to borrow up to another £50 billion. And so people are worried about what they might do. What they're trying to do here is to stoke the economy in the UK, but they're doing it by effectively imposing a lot more taxes on businesses rather than on individuals. They also announced a significant rise in the low-paid wage minimums. So there's a whole bunch of stuff going on. But the net result of this is more borrowing for longer. And that's why, again, rates in the bond markets are rising higher.
Yeah, and the same in Australia.
Yeah, so fascinating. The bond rates are also up. We'll talk about inflation in a second because that came out overnight. But yeah, so bond rates are a lot higher now. And if you look at it, from 3.5 to more than 4% for the 2-year, I've used the 2-year all the way through. It's a good proxy for the cash rate. It tells you that interest rates ain't coming down anytime soon, and significant pressure on the bond markets. It's worth noting, if you look at equity markets in Australia, they have moved up, but not so sort of consistently as the US. That's partly because of the China impact. China's stoking its economy, but not very effectively. We've got issues with the iron ore price. We've got issues with some companies in Australia not performing. So Woolworths, for example, came out and said that they've had a bit of a weaker time recently. So yeah, there's a whole bunch of things there, but something is going to break. Something between the bond market and the equity markets will have to break at some point.
Just in terms of government spending, I know we've seen Elon say that he's going to come in and clean out a lot of the government in the US, like he did with the Twitter staff. But in Australia, we've seen that submarine deal that's gone absolutely haywire. Have you read about the Spirit of Tasmania debacle?
I have.
Down here with the dock, and how that's going to be delayed for 3 years and hundreds of millions in tourism lost. It just seems like everything the government touches, like it's the worst possible outcome.
Yeah, unfortunately, what we're seeing quite often is the announceable sounds good, but then it's not followed through, right? And it's not delivered on time and on budget, et cetera, et cetera. And there's the Sydney Harbour Bridge, for example, was not delivered on time and on budget many moons ago. So, there's a track record here of big spending going off the rails. The problem we've got is if you look at spending around the world, most governments are having to pay a lot more now just to cover the interest costs on the massive borrowing that they've already got. That's the first problem. The second is they're paying huge amounts out for things like NDIS or other healthcare equivalents around the world. And that's a massive impost on the overall budget. Defense spending is also rising as well. And whilst the tax take is actually very high relative to long-term trends, the amount of tax being taken is not going to be sufficient to cover all the demands on the budgets. But a lot of economies around the world and a lot of politicians don't want to tackle that fundamental long-term gap between what they're spending and what they need to spend and what they have to spend versus their ability to fund it. And that's the real issue we've got. That's why global debt continues to rise. And that's why at some point things are going to go very wobbly.
Yeah, it's the quadrillion-dollar question these days, isn't it, Martin?
It certainly is.
Moving on, so gold and even silver's been catching up now. The I guess currency alternatives all doing pretty well in this environment.
Yeah, so it's interesting. Gold, of course, is touching new highs all the time. Now, there's a bunch of reasons, of course. Uncertainty, flight for quality. If bond yields are higher, then maybe gold is a little more attractive in some circumstances. A lot of people in China and also central banks, including China, are buying gold quite significantly because they're trying to avoid the US dollar. And of course, the US dollar has been quite strong quite recently. So there's a bunch of reasons why that is. How much longer this can go on for? If you read some gold commentators, they think there's another big run to come. They're talking 5,000 US. Others are questioning whether, in fact, it's now overdone and it will come back after the US election. Who knows? Silver also had a bit of a run too. So people are looking for alternatives because, frankly, the standard economic story is looking pretty sick, and gold is a protection against it.
Yeah, and you've got a Bitcoin slide at the end, which I was happy about, Martin, so we'll touch on that.
Yeah, I thought I'd put it in the end.
Awesome. But oil has actually been stalling a little bit. So
it's interesting that oil, of course, has been influenced by what's happening in the Middle East. And the US is a huge producer of oil, but we're still reliant on production in the Middle East as well. The recent events with regard to what Israel did, less strong response than perhaps some expected to some of the recent conflicts, has sort of allowed the oil price to come back a little bit. And you'll see that one of the reasons why inflationary pressures in, for example, Australia are down a bit is because the oil price has translated to lower fuel prices. Now, is that temporary or is it permanent? That will be an thing to watch ahead.
And I think the US strategic reserves are down to like a week or two now, which is interesting, with some talk of if the election is, really divisive and they have to go into martial law or something, how that's going to affect the economy and oil reserves. And it's a super interesting time.
Well, it is. And it just amazes me that the US is now the biggest producer of oil. Remarkable.
Yeah, yeah, crazy stuff from a few years ago. All right, so natural gas prices up as we head into winter in the northern hemisphere.
Well, it's fascinating because, of course, there's been a lot of noise about LNG prices are up, and they have moved up a little bit. But as you can see there from the little inset, it compared with a couple of years ago when we had the massive hike, we're nowhere close. So. Yeah. It's worth recalling, of course, that Australia is exposed to the international LNG prices because of the way that the gas merchants, basically raid the gas in Australia and then ship it overseas, and then we have to buy it back. So this could have an inflationary impact on the Australian story, particularly as the electricity subsidies are taken away later on, as we'll come on to shortly.
Yeah. Okay, so the BRICS. This has been interesting. Some of you have been following this story for years about, dollar alternatives, and the US dollar is going to die, and there's alliances being formed. But what are your thoughts on this, Martin?
Yeah, it's quite interesting. I mean, as this article shows, the BRICS happened in Russia. Putin effectively was able to show that he was still an influential figure on the world stage. And if you look at it carefully, you can see there that the BRICS nations account for about 45% of global population. The BRICS is not a unified entity. It's a series of entities that have some aligned interests. India, of course, has a foot in both camps. China, of course, is there too. And they are expanding. And what they're trying to do is to go round the US dollar. And that's what this agenda is actually about. And, who can blame them in a way? Because the US dollar, of course, being the keystone trade currency, is under some pressure. It has been relatively recently. There's also evidence that in China now they're selling US bonds more than previously, and that's going to be an interesting question. People are shifting in BRICS more to gold. They're looking at alternatives to the US dollar as a trading currency. So there's a lot to play for here. And I've been watching BRICS for quite some time. And, it's not going to be a linear path. But I do think this is a development which we got to keep a really big eye on, because it is signaling this massive swing in terms of power and power politics around the world.
Yeah, I agree. People calling for the death of the US dollar for 10, 20 years, but this is the first time I think it's rubber's starting to hit the road, and they're making some moves. As you said, 45% of the global population between these BRICS nations, compared to America, less than 5% of global populations, but people are really getting sick of them calling the shots.
Yeah, and by the way, it's 28% of the global economy. It's 28.5 trillion US and 22 trillion pounds. So this is huge and growing. And of course, the more that those economies grow and the more that they actually suck other countries to be part of it, the more it becomes a power block that you can't avoid.
Yeah. Okay, so record taxes will not stop years of deficits, says IMF.
Yeah, and this goes back to my central point as I started at the top of the show. Countries around the world are getting more and more in debt, and wherever you look and whatever you understand, the fact of the bottom line is that this is an unsustainable trajectory that we're on, particularly in Western economies. And interestingly, they actually did some modeling next year. And unfortunately, if you go to the next slide, you can see that Australia's inflation rate, this is from the IMF outlook, is going to be around 3.6%, which is the second highest in the world and way ahead of a number of others. If you look down the list there, you can see there that there are others with a 2 rather than a 3.6. This, I think, highlights a couple of things. Firstly, the Australian story with regard to what's happening with inflation has sort of swung away from, other countries. Some people are arguing, like Shane Oliver of AMP, that it's just a timing thing, that we're actually following the same trajectory, but later. There are others, and I'm more in that other camp, is there are some differences in the way that Australia's tackled the inflation story. They didn't lift interest rates as high from the RBA. We've got massive support temporarily in place from the government, and of course that's ahead of the upcoming election. So as this next slide, I made a show the other day calling inflation fears still haunt, especially Australia. And I do believe that the inflationary story in Australia is not yet beat. And that is one of the reasons why, when you actually look at the latest data on the CPI, which came out yesterday, what you can see there is that the information shows, 2.8% is now the sort of the headline, but that is including all of those government supports. The trimmed mean, which is 3.5, that is effectively excluding some of those government support. But if you look at it in partials, the insurance costs are very high, which you can't really avoid. Cost of fruit and vegetables up significantly. So there was various categories. On the other side, the support from federal and state relating specifically to energy dropped the inflationary element, well, maybe down 15% for that particular sector. So what you can see here, that these numbers are being messed with. And I go back to the ABS household spending information and the true costs of inflation, which is nearer to 7% even now, rather than the 2.8%. So these are Mickey Mouse numbers, but everyone's now saying, well, they're not going to cut rates this year. And in fact, even the CBA, who was always the most conservative in terms of what they thought that there would be a cut before the end of the year. Well, they've now kicked it out to February next year. So higher for longer is the story, unfortunately.
Yeah, Aussies know that they're still feeling the pinch, absolutely. So reserves jobs strategy poses inflation risk.
Yeah, and this is the other interesting observation. So the question is, the RBA in Australia has this dual mandate. It's about jobs and it's about inflation. And the argument in this article is that maybe they've focused too much on the job side and not sufficiently on the inflation story. So the interest rates are still 4.35% lower than many other countries. And if you look at New Zealand, where rates went a lot higher, but they've now been able to start to cut rates, the question is it actually feasible that we have a path to beating inflation with the current settings we've got? And there are a number of people who are suggesting that the RBA has been caught now between these two targets and that they're actually now unable to deliver on this inflation target in a timely manner. They keep kicking out their expectations, and that's going to put a lot more pressure on a lot of businesses, a lot of households, and the economic dynamics in Australia are potentially now being cruelled by the rather poor strategy that the RBA decided to adopt.
Yeah, and that will be panic mode a little bit if they have to go against what their global friends and allies are doing in terms of cuts and stimulus or whatever the next event comes, if they can't enact the same policies.
Yeah, and the question is, what happens to the exchange rate in the process, right? So the dollar was quite a lot stronger. It's now quite a lot weaker again because of what's going on. So there are consequences. And, I always remind everybody that the unelectable and unaccountable RBA has stuffed up the economy considerably over recent years. And I still think they're doing it.
Yep. Okay. So housing fix, marginal at best, the proposed measures.
So this is quite an interesting. So both sides of politics in recent weeks have been chucking out announceables left, right, and centre to try. We'll fix the housing. We'll allow people to borrow more, or we'll give them more support. We'll build more houses. But the point is, and this article actually, if you look on to the next one, is basically saying the dueling housing policies of Anthony Albanese and Peter Dutton in response to Australia's home ownership crisis and spill over into immigration, superannuation, infrastructure and tax will be actually determinant of the next election. Basically, both sides have planted toxic seeds. None of them are really tackling the critical issues. Councils, state and territory governments have failed to unlock enough land, have become obsessed with red and green tape, and for too long have enjoyed the gravy train of housing taxes, infrastructure charges and rates, which increase year on year. The housing crisis, along with concerns about migration infrastructure, are now the main issues for sceptical voters. And the point is that both sides of politics are playing politics with housing, and neither side of politics is really wanting to tackle the critical issues. Migration needs to be dialed back. That's the critical driver that could be done. If you did that and tackled the gas pricing issue, would be a long way forward. But no. We go around all the houses. And talking about going around the houses, of course, Albo decided to go and buy a big property on the up the coast, right? Having previously decided to put a road in that area, and approved 100 billion for a new road as well. I mean, you can't make this stuff up, really, can you?
Yeah, we've got a ways to go to Aussie politics gets us out there as US politics, but it feels like we're on that path with some of the recent stuff that's come out as well.
Exactly. Yeah. And the next slide is just another, the RBA, I said I don't believe the RBA has done a particularly good job. They are actually in the red considerably because of the way that the bond markets are moving. They had a big stock of bonds. So they're not going to pay a dividend. And there's an argument now that the government should actually be paying more money across to the RBA to help them with their finances. Now, in theory, having a deficit at the RBA is not a huge issue. But it's a signal. It's a signal of bad management and bad policy. The term funding facility, that massive amount of money they throw at the banks, they did a report quite recently to say it didn't actually achieve its objectives. That was a huge amount of impost on the budget, and so many other things that they have done. So nobody really wants to really shine the spotlight on just how bad this has been. And I would say that it's a major fail for the Reserve Bank. It's also a major fail for governments of both persuasions. And here we are with a massive deficit sitting on the balance sheet of the RBA.
Yeah, absolutely. All right. So next up, the banks are looking to lower that bar again and increase lending, even though we've got crazy policies already.
Would you believe it? So so the banks, particularly ANZ, have been saying, 3% buffer now with interest rates as high as they are, we should be reducing it. Actually though, I felt a bit sorry for the ABA, the Australian Bankers Association. They actually were in front of Parliament with some of the other people last week, and I actually made a show about it called Opening the Housing Affordability Can of Worms, because not all banks agree. So CBA and Westpac don't want to have that buffer changed, whereas NAB and ANZ probably do. And there were peoples of both sides of politics arguing different points of view. So Andrew Bragg, for example, who led the discussion last week, is very keen to show that we want to give first-time buyers better access. But then a lot of other people, including the consumer groups, were saying, no, you've got to understand there's huge debt pressure on a lot of people in Australia. The last thing you want to do is to make that debt bomb even bigger. And in fact, I quite enjoyed the Alex Joyner comment, which showed that if you compare the Australian bank and residential property returns in recent times, the banks get it all in the end, yet they always are pushing the boundaries to lend more, lower credit standards, lower the mortgage buffer, extend low terms, etc. This comes despite the Australian household sector being one of the most indebted in the world. I think that sums it up rather well. And this whole idea that we should be lending more when in fact the growth in lending over the last 12 months has accelerated dramatically is just nonsensical.
Yeah, they're always looking to put more risk into the fragile system, man.
I know. And if you want to talk about risk in the fragile system, this chart from SBS is a real killer, right? So you can see there that the New South Wales wages, they're tracking along the bottom, and you can see basically Sydney houses, rest of New South Wales houses, rest of New South Wales units all rising dramatically. But look at Sydney units, right? Sydney units have hardly tracked higher than wages. Now that's very interesting, and a lot of people are questioning that data. It's true. The reason it's true is because we had this massive upswing in high-rise construction, poorly built, so a lot of supply. A lot of people are unable to lift the rents much higher because people can't afford to pay more rents if you're in the investment sector. The charges for the ongoing management of those units are actually going through the roof at the moment. So a lot of people are also trying to get out. So this really shows you just how broken the whole housing story is, particularly in New South Wales. But I would argue that this is also happening other places too. But nobody really wants to talk about this stuff. And yet for me, this is the critical indicator of trouble ahead.
Yeah, absolutely. Well, I know you'll keep covering it, Martin. So if someone's talking about it.
I can't help it. And I've been watching this since 2001. I knew it was going wrong at the start of 2001, 2002. I made my first TV interview on ABC, I think, talking about the risks of the housing market at that point. And it's been going ever since. And if you look at the next slide, prices stretching the bank of mum and dad, a single buyer on the average income would need to ask the bank for $900,000 to afford the average Sydney house, or $300,000 for a unit. I mean, you can't make this stuff up. There's a massive shortfall, a massive disconnect between incomes and housing prices. The only way to solve this is to recognize that houses need to actually come back down a little. Now, that's not very popular. That's not politically popular. And yet you can't pump this, gas-filled balloon even more. It's going to burst if you do. And yet, of course, banks want to do that by cutting those buffers. So it's pretty nuts. And I had a chance to talk specifically to the ABC about some research that I did on older Australians who are moving into retirement with a mortgage still, or indeed are not able to retire because they've got this mortgage noose hanging around their neck. So they're having to put off their retirement plans because they've still got this massive problem. And the next slide is a killer slide. This is from the ABS. It shows you that the outright home ownership by age demographics is sliding across the board. But even those aged 55 to 64, a smaller proportion actually own their property outright. So who are the winners? The banks, because they've got these huge portfolios of mortgages that everyone's having to pay through the nose for. Who are the losers? Those trying to move into retirement, those trying to get into property. So these are some of the structural issues that the government should be talking about in their housing inquiry into home ownership and the financial regulation. But no, this is the meat of the discussion rather than the fluff that they want to talk about.
Yeah, I mean that slide kind of shows the whole plan really. If you own nothing and be happy, this is that trend line, guys, where we're trending towards people never owning anything and being perpetually in debt their whole lives.
Well, yeah, and it's interesting because I've had some conversations with people who are thinking about still holding a mortgage into retirement and just recognizing that they're going to have to continue to pay right until they sort of fall off the perch. I mean, this is almost unheard of. And of course, there are people now paying 50 and 60% of their net disposable income just for somewhere to live, whether it's rent or whether it's actually a mortgage. And the old argument used to be that once you got towards retirement, you basically owned your own house. That gave you security and a foundation into old age. But if you're still paying that mortgage, then you've lost that security. And unfortunately, more and more people are now struggling with this massive dilemma. As you say, you will own nothing, because you don't own it if you've got a mortgage on it. And what that basically means is the banks now are calling the shots. And the housing debt machine has now expanded to a greater proportion of the economy than almost ever before.
And those flow-on effects if the boomers don't own their property and they're not out holidaying and paying at restaurants and the service sector economy, which we have in Australia, and all that type of thing, that's that flow-on effect.
Well, that's right. And it's interesting. There are some people, of course, without debt and without mortgages who are still spending big, but a lot of other people aren't. And that's why we've got this sort of bifurcation in terms of household finances.
Yeah. Okay, so a bit of relief for Sydney rents.
Yeah, well, I thought I should put a bit of good news in, sort of. So they're basically highlighting the fact that rents have begun to fall in some areas around Sydney. The biggest rental price drops in Metro Sydney were in North Willoughby. But in rural New South Wales, the Illawarra, there's been a sharp decline there, with Ballama units down 23%. This is showing that things are actually beginning to turn. Maybe too soon to call it, but it looks to me as though some of the issues... Now, some of this is to do with the changes in government regulation in New South Wales. So they're actually stopping people evicting tenants in certain circumstances and other things too. Following Victoria, but it's interesting that if you look at Victoria, when those rules came in about a year ago, what that started to do was to put effectively more property investors under pressure. So more property investors started to sell. So the supply of investment properties disappeared in terms of the rental sector. So the rentals got caught in that. It'll be interesting to see where it plays out here. So, it might be good news, bad news when it comes to actually what's going to happen ahead.
Alrighty, so Labor flags that will knock back big premium rises.
So this is another interesting, the Labor Party ahead of the election is trying to actually say, oh, look, we're doing the right thing. So they're going to probably push back on the health insurance inflation premium rises, which will potentially quite significant because these flow into cost of living. We are seeing the government trying to sort of keep a finger in the dike when it comes to the inflationary story. As I said, I think over the next little while, that's going to pretty much turn around, because I think probably we're going to find inflation doesn't come the way down. Will it be down when the election is called? Who knows? They've got a problem. They've got to go by May. So watch this space. And I should take the next slide just to say to you that the retailers are warned that Christmas trade will be tough. A lot of people are struggling, Well, people haven't necessarily spent or received all of the stage 3 tax cuts yet, and they're shopping on a budget. I'm seeing that in my surveys. A lot of households are beginning to really say, what are we going to do? We can't go on the way we're going on because we don't have enough income relative to expenditure. More households are in difficulty. And even with the government support, which is temporary, like for the electricity, for example, things could go pear-shaped quite soon. Consumer confidence did tick up very slightly, and that may be something to do with the effect of recent announcements with regards to the electricity support, but they're still way down on where they were, which then questions, well, what should we do? Well, that's why some people are looking for alternatives. And of this last slide, well, Bitcoin, look at Bitcoin. It's gone up. And that's a signal, right? That's a really interesting signal.
Yeah, and I think the other thing I'll just mention quickly is with retail struggling in general, we've seen that translate in the crypto space as well. We haven't seen the altcoin manias that we had in previous cycle. It's really been a story of the market maturing and flows mainly into the Bitcoin ETF and the Ethereum ETF. So yeah, that's interesting. I think it definitely ties in with that.
And one quick question: did you hear about the latest on Tether? So there's more announcements now coming that they're still chasing the Tether story. I think in the US from the regulators there.
Yeah, I mean, I am in touch with the CEO, and I've interviewed him over the years. I know he's been sharing pretty openly what assets are backing Tether, but that would obviously be a big black swan event if it came out that they weren't fully backed. But as far as I'm aware, there's been one of these big stories every basically 2 years of Tether's 10-year history that they're going to collapse.
I know.
It hasn't ever been true so far, so who knows, but definitely one to watch.
Yeah, and I guess my takeout from all of this is that we live in a world of great uncertainty, and that's not surprising to find people then looking for alternative strategies and trying to think about differently. The bottom line, though, is that many households are still very much up against it, whether you look in the UK or whether you look in Australia. Governments don't seem to me to be actually doing things which make a lot of sensible strategy, but they're doing a lot of things for announceables. They're trying to sound good. They're trying to actually say, oh, we're looking after you, when they're probably not. And meanwhile, central banks are not necessarily pulling the levers the right way. And meantime, global debt continues to rise, which takes us right back to then. So people say, well, if the financial system is looking so wobbly, then what are the alternatives?
Well, I think it's great that people are waking up out there and turning to alternate media and questioning. We see trust in healthcare and professionals and media, all these things hitting all-time lows. So hopefully people continue to wake up and keep watching both of our channels, mate.
For as long as we can continue to make them.
Absolutely. Cool. All right, guys. Hope you enjoyed that one. Thanks, Martin. We'll catch up again next month.
See ya.